Well, let's talk about oil now. Since the invasion by Russia of Ukraine, Russia has been a wild card in the international oil market. We're now joined by Vikas Dwivedi. He's a global energy strategist at Macquarie, and he joins us from Houston, Texas. Vikas, thanks a lot for joining us. What is the current state of Russian exports of oil to countries that are willing to purchase it? I was told a short time ago that some markets are very interested in buying cheaper Russian oil.
Yeah, that's the case. Everybody is interested in buying cheaper oil, and it's mostly business as usual with respect to Russian barrels. So we would agree. I think the only thing we might say a little differently is it's not some countries. We think everybody, maybe outside of Europe and a few select regions, but most of the world, if they can get access to the discounted Russian barrels, they're incentivized to pursue those.
When we look at the price of West Texas Intermediate crude traded in New York, is there a Russia effect there? Are those prices higher than they would be otherwise?
Probably a little bit, but not much. The market is still largely not buying in on the potential for Russian barrels to go away, despite some of the new announcements and some of the things that are coursing their way through Congress that would have that effect, right? It would remove Russian barrels from the market. But right now, the market is taking a wait and see and maybe a little bit of a skeptical view that, look, we've seen this type of thing come and go, and the barrels really never go away. So there's a lot of conditioning there.
The price of WTI has been volatile over the past year, lots of ups and lots of downs, lots of rallies that faded away instantly. That suggests a market where traders and investors are uncertain about the supply-demand fundamentals that will play out over the next year or so. What is your take on those supply-demand fundamentals?
We're bearish. We think the market is in the process of developing a substantial oversupply. And, there's a lot of seasonality. There's a lot of physical dynamics that can keep the market bid up for a little bit longer than fair value would suggest. I think we're in the middle of some of that seasonality right now. There have been some capital inflows that are supporting oil and some fundamentals, too. It's not just all external factors. There's some internal oil dynamics that are a little bit on the tighter side. But I think as the year goes on, the inventory bills will become quite substantial, and we think they won't just be in China. We think they'll be in Europe and the U.S., which are more visible, and that will help the price go down.